Joining us now to discuss more about markets is Julius de Kempenaer, Senior Technical Analyst at StockCharts.com. Welcome, Julius.
Hi, George. Thanks for having me.
Yeah, glad to have you. So April was supposed to be up only, Julius. What's going on today?
Well, so far it seemed that way until today. But what I'm looking at is at the bigger picture here for Bitcoin. And if you look at a weekly chart of Bitcoin, which shows us the really long-term trends, and everybody's talking about that 30K level as being very important, and I adhere to that. I think that 30K is a very important level, although in my world it's not exactly 30K. It's a bit of a range there, and I've labeled it as being between 28.5 and 31.5K. I think that's where Bitcoin is expected to run into trouble, and we're seeing that happening today. And if you look at that chart, it goes back. The range goes back to early 2021 when, after the break, Bitcoin started to test that range as a support area. And then obviously we had that first jump to 65.5. We came down, and then in the summer of 21, we had a few bottoms, a few lows in that area between 20.5 and 31.5. We had our second run up to 65.5, and then basically the deterioration started. And we had a little bit of a pause and a hesitation somewhere in May 2022 before we broke really lower. And then, everybody thought it was the end of the world for Bitcoin. And I too, I was in the camp that, hey, this is really, because this was a massive double top. And we did go much lower. We ended up around 15K, and then we started to settle and build that base, that really long-term base that you can see from, let's say, June, July 2022 until, last month, like 3-4 weeks ago, when we had that 25K level. That was an important resistance. That was when you see that really long candle, that when we broke above 25K, that was the moment that base pattern was finished. And we're now from that point onwards, we were on the way up, and you can see a very nice rhythm of higher highs and higher lows. And we now entered that resistance zone between 28.5 and 31.5. And
right.
if I think that we need a little bit more time in this area here, and you can see that on the daily chart. If you zoom in on the daily chart of Bitcoin, which gives us a little bit more granularity there, then you can see how we kind of stalled in that resistance area. And I plotted an indicator below it. It's the RSI, the Relative Strength Index, and it's an oscillator, overbought, oversold oscillator. And one of the stronger takeaways from an indicator like that is when you see divergences, and that's exactly what we're seeing here. You can see how the Bitcoin price has moved higher, and the RSI, the index below it, is putting in a lower high. So Bitcoin price is putting in a higher high, and RSI is putting in a lower high, and we call that a divergence. And in this case, it's a negative divergence. It's not the end of the world, but it's sort of a warning signal that things are deteriorating. We need a little bit of a break. And the way I look at it, because that area where we're in right now is such a heavy resistance area, I think this can go either sideways, so we take our correction by moving sideways, or we see a bit of a decline, and it could go as low as 25K, although I don't think it'll happen. But when push comes to shove, worst case scenario, that is possible. Longer term trend, I do think that Bitcoin will eventually break above that resistance area and will find its way higher.
Right. So Julius, you're talking to me about resistance. You're talking about these sticky points within all these technical indicators that you're pointing out. What's the story? What's the event? What is going to have to happen for Bitcoin so that it makes the chart break through your stickiness level? Is it simply going to be trading? Is it going to be something happening to Bitcoin itself, or is it something completely different?
Well, in the end of the day, it's always the trading that makes it happen, right? I mean, just the simple fact that something's happening is not going to make a price break. People need to respond to something. So if something happens, and whatever that something is, for us as technicians, that doesn't really matter. We like to see the result of that. So whether it's the new halving, whether it's something, on the regulatory front, whether it's, I don't know, whatever event that can happen. And people need to translate that into buying Bitcoin. And when that happens, then the chart will reflect that and will reflect the sentiment of the people, and you will see your break. So whatever the underlying event is, quite honestly, I don't know. I mean, it can be anything.
Right. Julius, do you guys look at and compare the trading behavior of, say, gold to Bitcoin, or do you guys look at Bitcoin in comparison to other stock indices or even other cryptos, or is it simply looking at Bitcoin on a Bitcoin basis?
Both, I would say. So in this case, it's obviously a straightforward comparison, Bitcoin against the US dollar. You can do it against gold. I'm not sure whether I'm a big fan of that, but I do use Bitcoin as a proxy for the asset class crypto. So, I do a lot of work on asset allocation. And so I use Bitcoin as a proxy for the asset class crypto. And what you see there is that, for the last, 3-4 months, Bitcoin is way up ahead of everybody else. So it's really a very strong asset class at the moment. Problem is, it's a very small asset class when you look at it in terms of assets under management and market capitalization, but it's definitely there. So if you want to sort of create some alpha in your portfolio, divert from whatever benchmark you need to beat, because that's obviously for a lot of people that's the case, then some allocation to Bitcoin or crypto in general definitely makes sense.
Right. So, Julius, you tell me that we're maybe sideways down in the near term, but hopefully long term we break upwards. That's all the time we have for you today, though. So thank you for joining us. It was great to have you.
No problem, and you got that right.
Yeah. That was stockcharts.com Senior Technical Analyst Julius de Kempenaer.